One of the biggest events in crypto's history is coming. The long-awaited Ethereum Merge is less than 2 weeks away. Ethereum will be completely changing its consensus mechanism, so a lot is riding on the successful delivery of the merge. Now, as Ethereum is a $200 billion ecosystem made up of thousands of developers, hundreds of protocols, all which power half of the crypto market, so this is a pretty big deal. So in this video, I wanted to make sure that everybody gets up to scratch with exactly what's changing. And so we'll be looking at the 3 biggest changes happening to the protocol. Then we'll dispel some myths about what's not changing, as Ethereum's average transaction cost and speed will in fact be changing. And then will we see an explosion to Ethereum's price? As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, to help get everyone up to scratch with what exactly is changing and why this is such a big event in crypto's history, let's start with the 3 biggest changes. And number 1 biggest change is the energy consumption. Now, in the past, things like environment wasn't a focus for companies. It was all just about profits. But today, energy and climate is a hot topic in the investing world, with companies like BlackRock really pushing ESG, the environment, social, and government implications of a business. Now, unfortunately, there is a big prevailing narrative slamming Bitcoin for its energy use, to the point it was recently almost banned in Europe. Now, here's a great graphic that shows the energy consumption difference between Bitcoin, Ethereum, and Ethereum after the merge. Now, currently, Ethereum's energy is like the Leaning Tower of Pisa. However, Bitcoin's energy, as you can see, is already the tallest building in the world, the Burj Khalifa. And this is why we have the narrative that Bitcoin uses so much energy. Now, after the merge, Ethereum will be going from the Leaning Tower of Pisa all the way down to a single screw. And so, as you can see, Ethereum's energy usage would be the difference between a little screw and the Burj Khalifa. And so this is going to be incredibly appealing to the big institutional investors. Number 2 biggest change is its triple halving event. The triple halving is all about issuance, or using the dollar as an example, how much new money gets printed every year. As we all know, printing money debases the supply, leading to inflation. Now, as of right now, Ethereum is inflating at 4.3% per year. And so what's going to happen after the merge? And the best way to explain Ethereum's triple halving is to give you a visual of Bitcoin's halving event. So every 4 years, there is a Bitcoin halving event, which is a pretty big deal in the crypto sphere. And essentially, this is what is going on. Miners get rewarded in Bitcoin for every Bitcoin that is mined. So in this period, all the Bitcoin miners used to get 50 Bitcoins for every Bitcoin mined. Then this was a halving event, and the rewards get halved. So in this period, miners were getting 25 Bitcoin. Then a halving event, same thing, the rewards get halved. Now it's 12.5 Bitcoins, halving event, and now it's 6.25 for each Bitcoin. So this is the halving event. Now, as this affects supply and demand, you'll notice that after a halving event, look what happens to the price. We've been getting these huge rallies followed by these big multi-year lows. Halving event, huge rally. This was the last crypto winter here. Halving event, we had this huge run, and this is where we're at today. So that's the Bitcoin halving event. Now, a triple halving is simply this. If a halving event reduces it by 50%, if you were to cut this in half again, this would be a 75% reduction. And if you were to cut it in half again for a third time, this would be a 90% reduction. And this is pretty much what's happening to Ethereum's issuance. It'll be going from 4.3% today down to 0.43%. And then as a little additional cherry on top, because of EIP 1559, where a part of the Ethereum transaction gets burned, the actual issuance after the merge will be going negative. So one of Bitcoin's biggest appeals is that it has a fixed supply of 21 million. Well, the great thing about Ethereum is that it's going to have a shrinking supply, which again, this alone could have huge impact for Ethereum over the coming years. And then the third biggest thing happening is this crypto yield. Now, investors and especially institutions love yield. For example, Warren Buffett keeps most of his cash in bonds. So his cash still makes a yield, a percentage, while it just sits there. And in the stock market, some companies pay a dividend. In bonds, you get a fixed yield. And now with crypto, staking protocols also give investors a yield. Now we're going to hop over to Lido, which is one of the biggest places where you can make yield for staking assets. And if we scroll down, we can see what is currently being staked. Even though it's not quite launched, the Beacon chain is still giving you 3.9%. You're getting 5% for Solana, 6% for Polygon, a huge 16% for Polkadot, and almost 14% for Kusama. So 2 things to note here. Now, these huge yields might seem massively appealing, but let's just check out and see where the money is going. So on this platform, there's currently just under $7 billion being staked. And 6.8 billion of that 7 is with Ethereum. So you can see this is the one of choice, and it's going to be the safest for the big institutions. And second point to note is that Ethereum's yield will be increasing. So going from this 3.9 up to about 5%. And for institutions that have got tens of billions of capital looking for yield, but they want to choose a very safe platform in comparison, this could be huge for Ethereum. Now, let's just quickly cover the myths of what's not changing. As you may have heard, the 2 biggest sticking points for Ethereum were the average transaction fee and the TPS, transactions per second. And you may have heard that these are not actually changing. Well, this isn't necessarily true. Now, Ethereum's average block time will be changing from 13.6 seconds down to 12 seconds. So this is going to reduce Ethereum's average transaction cost by 12%. And the flip side of the coin, it will increase the speed of Ethereum by 12%. So these, in fact, will be changing. So what's going to happen to Ethereum's price? Now, the big question everybody wants to know is what's going to happen to Ethereum's price before, during, and after the merge? Well, the true answer is who the knows. No one knows what's going to happen. You could build a case for either direction, and all the people who get it right this time will probably get it wrong next time. Now, I personally like to hope for the best but plan for the worst. And as most of my crypto money is in Ethereum, obviously I would love the price to skyrocket after the merge. However, if I had to guess, I would say if the merge was happening in a bull market, then it really would have sent the Ethereum price to the moon. And with the crypto market being a niche market, so global stocks 100 trillion, crypto market 1 trillion, and Ethereum's not even the biggest asset in that market, and the global economy is in such a mess right now. I personally don't think the merge is a big enough event to override the global economy. And so I have my dollar cost averaging targets to the downside, and I'll just ride it to the upside. So there you are, guys. Hope you enjoyed. Now, with the merge coming very soon, you now know the biggest things that are about to happen. And what do you think is going to happen to Ethereum's price? Let me know below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. And I'll see you in the next video. Bye for now.